Hello, everyone. My name is Jenny Oy. I work at Xero and I look after all our tax products for the US and Canada. And today I'm going to share with you Xero's journey of implementing sales tax for our US customers with our partners, Avalara. Firstly, a little bit about Xero. We provide accounting software for small businesses and their advisors. And we take a lot of pride in making our accounting beautiful and easy to use for our small businesses. Xero's mission is to help small businesses thrive. And these are our customers: tradies, photographers, small shop owners, boutique store owners, restaurateurs. These are people passionate about what they do and they excel at their craft. They primarily go into business to do what they love. Many have never run a business before, and they typically fumble their way through learning how to run a business, from managing sales to hiring staff. Of course, all the legal and tax obligations a business is required to adhere to. And the last thing that these entrepreneurs want to worry about is their accounting. They'd much rather be on the tools doing what they love. So Xero was founded in New Zealand 17 years ago. It's cloud-based software from the beginning, which is impressive from that time. And Xero is now a global business. We started in New Zealand. We now have offices in Australia, Singapore, South Africa, UK, and of course, US and Canada. And moving into new regions has had its no end of challenges, as you would expect. Different competitive landscapes, cultural nuances, and of course, different regulatory landscapes. And when you're in finance and accounting, let's say, those regulatory differences have quite a profound effect on your product fit in new regions. And sales tax is an excellent example of this. So, which of these is not like the others? If you guessed US sales tax, that is correct. Xero grew out of Australia and New Zealand and into other Commonwealth countries like the UK and South Africa and Singapore, where sales tax is quite similar. And our journey to get US sales tax working in Xero has been very challenging. Let me explain why. So here are some of the things that we learned. Lesson number one is the US is more like 50 countries to us. And when you consider, for example, the state of California, it is larger by population than the whole of Australia. So it really is to us 50 countries. And when you look at the way the US handles sales tax, each state has its own tax rules and rates. So, for example, in Australia and the UK, Singapore, South Africa, in these Commonwealth regions, we have typically one jurisdiction. So in Australia, we have the ATO, the Australian Tax Office, one place to file your sales tax nationwide across the country. In the UK, HMRC, one place to file all your sales tax wherever you are in the UK. In the US, there are 14,000 jurisdictions. That's 14,000 different government bodies that collect sales tax. And that's not a typo. It's not an exaggeration. It's a fact. California itself has 470 local tax jurisdictions across the state, across counties, cities, local governments, 470 just in California alone. Yeah. So if you think about that for Xero, in all other regions, Xero has built direct e-filing of sales tax with the local government in Australia, UK, etc. Doing this in the US with 14,000 jurisdictions is not quite the same. In addition, in Commonwealth regions, we typically have one tax rate. So in Australia, we have 10% GST. And in the UK, there's 20% VAT. In the US, there are too many tax rates to count. I'm not going to bother. And you'll understand why as we work through some of this. In addition, in Commonwealth regions, typically, whether you have to collect sales tax or not is based on your income threshold. So, for example, in Australia, if you are earning more than $75,000, you have to start to collect sales tax. In the UK, if you are earning more than £85,000, you need to collect sales tax. And there are some exceptions in Australia where the threshold for nonprofits is 150K, but generally it's pretty simple. There's a one income threshold for the majority of people collecting sales tax. In the US, each state has its own rules, and whether you collect sales tax is based on a number of factors, whether you have physical nexus, which means you either physically reside in the state or you travel into that state to do business, or economic nexus, where you may be an e-commerce business selling products across the country. And if you hit more than $100,000 of sales in a particular state, even though you're not physically there, you need to start collecting sales tax. It gets very complicated. And so it's much more difficult to work out whether you have collected sales tax or not, whether you need to collect sales tax or not in the US compared to other regions. In addition to that, there are even more factors that specifically impact the tax rate that you need to collect, or the amount of tax you need to collect, once you determine if you need to collect it in the first place. So in Commonwealth regions, there is no concept of these additional factors. But in the US, things that you need to also consider is where you're selling from and where you're selling to. So for example, if I'm selling a pair of shoes from California to Texas, it will be one tax rate. But if I sell the exact same pair of shoes from California to New York, it will be a different tax rate. In addition, certain products and services have their own tax rates. So clothing is taxed differently to food, which is taxed differently to services, and different types of services are taxed differently. And even how that product is delivered can affect the sales tax. So for example, in some states, if you have a coffee shop, if you sell a coffee that is takeaway, where someone is taking that coffee away and leaving the premises, it has a different sales tax rate to if you serve that coffee at a table within your store. Crazy. So somehow Xero needs to work out how to factor all this in for our customers, and we need to work out how to determine tax rates like this, which is completely different to how we've done this in many other regions before. This complexity is new and somehow we need to sort this out. In addition, sales tax actually works fundamentally differently to GST and VAT in those Commonwealth regions. And the reason for that is in New Zealand, in GST, VAT countries or Commonwealth countries, tax is collected at every stage of the product life cycle. So for example, if you are a manufacturer and you're selling silicon to a phone case maker, a cell phone case maker, then it might be $5 and you would add sales tax to that. So you $5 plus GST. Then that cell phone case maker might then produce that product and then sell it to a retailer for $15 plus GST. And then the retailer then sells that product to the end consumer for $25 plus GST. So at each stage of the life cycle, GST is collected. In the US, it's different. Sales tax is only collected at the point of sale with the end consumer. So the manufacturers and wholesalers do not collect tax through the product life cycle. Sales tax is only collected at the end when it's sold to the consumer. Now, the US system might look simpler on the surface, but alas, there are implications that we need to handle, which is that all these manufacturers and wholesalers are now exempt from sales tax. So you need proof of that, and you need to know who is exempt from sales tax, and you need proof as well. So, and then the way you calculate sales tax or you remit sales tax is different, because in Commonwealth countries where you're paying tax throughout the product journey, you have the tax that you've collected along the way minus the tax that you have paid. And that is your tax obligation. Whereas in the US, you only have to remit on the tax collected. And so tax paid is not relevant in the US, but we've built that into our accounting platform. And so we need to remove a lot of those rules and capabilities and systems built around that whole concept that you collect, you need to remit tax collected minus tax paid. That's not applicable in the US. So our whole system is kind of fundamentally is different, and we need to be able to support that in a different way. So you can see that there are very significant differences in how sales tax is handled from Commonwealth regions, where Xero has come from, to what is required for the US. And Xero is just not built to handle the complexity of US sales tax. So it's been a very challenging journey for us. But more importantly, how do small businesses cope with this complexity? And how can Xero help them navigate this and make it simple for them? Because our mission is to make accounting simple, and this is not simple. So let's meet Lucy. She is a photographer. She's passionate about photography. She runs her own business. She's never run a business before. She's learning as she goes, like many small businesses do. She has 3 of her team that work with her out of New York. So they're based in New York. But she also has 2 employees that live and work in Texas. She does a few photo shoots in New Jersey every now and then. She has a regular customer there. And she's also got a really exciting new gig in Washington, DC coming up. So she's been about 5 years in business. And she learned very early on that when you travel interstate, you hit a physical nexus, which means that you need to collect tax in those states that you work in. And when she was starting out, she avoided signing up any work outside of New York just because sales tax was all a bit hard, and it actually stopped her from going after new business until she got a little more comfortable. She was in business a little longer, and then she started to expand. So yeah, she avoided signing gigs out of state, but over time it became worth it to build her reputation and expand the business to do this. But it's not a small decision to make. So Lucy needs to register and collect sales tax in 4 different states. Photography services, digital prints, physical prints, and other types of products and services that she might create in her photography business are all taxed differently. In some states, photography services is taxed. In some states, it's not. And for physical prints, for example, the tax rate will be completely different in one state to another. And each state has different filing deadlines in addition to that. So she has different frequencies of filing as well. So because she does less work in New Jersey, she only files quarterly in that state. But in New York and Texas, where the majority of their work is, they file monthly. So you can imagine staying on top of deadlines and what to file when is also part of her challenge. So Xero's mission is to make it easy for small businesses. And together we can solve this for Lucy. Avalara has been an essential partner for us to make this happen. Xero could not have built sales tax in Xero without Avalara. So let me show you how we've made Lucy's work easier and help her use the correct tax rate. So imagine Lucy is creating an invoice for her first DC client. She hasn't worked in DC before. So the sales tax is based on the to and from address, as we discussed before. So The to address, she has put in her contact before, and the to address in the invoice is pulled from her contact. Her from address is based on her account. For each item in the invoice, such as photography services or printing services, she can search for the tax code in the line item for each line item, and Xero goes and calls Avalara, and Avalara will give us the exact tax rate for that product for the to and from address, based on whether Lucy has to collect tax in that state or not. So you can see there that Avalara is calculating sales tax on the fly and providing that into our invoice, into the Xero invoice. So it's completely seamless for Lucy. She doesn't know or necessarily understand that Avalara is calculating that behind the scenes. She's just creating an invoice. She doesn't have to go and hunt through websites and government websites to understand what sales tax is appropriate for which type of product services that she's going to be offering in DC. She can just come in, create an invoice, and Xero and Avalara do all that for her. So it's much easier than what she with that service. So if Lucy is collecting sales tax, she also needs to file sales tax. So we also want to make filing as easy as possible. So when it comes to filing time, you want to see your obligations by jurisdiction. So don't forget, even though you are operating in a state, you may have to remit tax to the county and the city and the state, or multiple counties and multiple cities and the state, depending on where you've done business in that state. So we provide reports that allow her to break down the tax by jurisdiction. We give her the revenue and the tax, and it makes it really, really simple for her to then go to the government portal and enter in and file her taxes. She can also dig deep into transactions if needed and go back and see where each transaction came from. But it really just lets Lucy grab the data and file it herself in the state portals really quickly. But when you start to file taxes in 4 states, it gets more and more time consuming, especially when you have different filing periods. So business is going well for Lucy, and she's more profitable now, but she is more time poor. So she can decide to sign up for Avalara returns for small business, and Xero will automatically send all her transactions and invoices from Xero into Avalara, so it's completely seamless, and all her filing management can be done in Avalara, and Avalara will file those taxes on her behalf. So that's an option that we've provided through the Avalara service to make our lives even better for our customers. So we hope we'll be making people like Lucy's administrative load a little bit lighter. It's all about making their lives better. This is just the beginning for Xero. We have just launched limited preview, or in limited preview now, and we will have a full release later this year. So we're just coming out the door. But this has not been easy for Xero. This has been a big deal. We've had to fundamentally rethink how we store and display data, and how we accommodate all the nuances of US tax in Xero, which is very different to all our other regions. But thankfully, we've had a wonderful partnership with Avalara. We could not have got sales tax into Xero without them. They are super generous with both their time and their expertise. They're always there for us. They're very enthusiastic advocates with both their customers and publicly. They've been very supportive of us on our journey and very patient with us, because we've had to learn a lot, and they're super flexible. They do what's right. They're not bound by what's written in the contract. We work together, they're flexible, and we do what's right for both of us. So thank you, Avalara. It's been a real pleasure working with you. So I wanted to leave you with one thought. If you are planning to launch software in the US, if there's anything you learned today, Do not underestimate the complexity of US sales tax, and I highly recommend talking to Avalara about how they might be able to help you. I hope you enjoyed our story, and if you would like to learn more or have any questions, please put your questions in the chat and I'll get back to you, or reach out to me on my social media or email. Thank you very much.